What happened to Three Arrows Capital, or 3AC as it's popularly known? A fund that has been in existence for over 10 years and had about 10 billion in AUM according to Nansen. This fund had investments in Solana and it saw this investment rake over 500x at its all-time high, and similar investment in a number of other projects that they were invested in. In fact, it got to the point that everyone just wanted to invest in only projects that 3AC had seed investment or strategic investments in. However, this fund went from 10 billion in assets under management to a negative 1.6 billion dollars. In this episode of Crypto Forensics, we are going to consider what happened to 3AC and what made it go down. Founded in 2012 by Su Zhu and Kyle Davis, old school classmates who started their dabble into finance from their living room. Davis and Zhu first met at Phillips Academy and they both studied at Columbia University before working at Credit Suisse for a while, and then they set up Three Arrows Capital in 2012. By 2017, they took interest in crypto and became almost exclusively a crypto fund in 2018. Perfect timing, you will say, as they made a fortune over the years. The good time. They invested in some of the most solid projects you can think of in their seed or private rounds, and this includes the likes of Solana, Aave, Polkadot, Terra, and then they also had some Bitcoin and Ethereum. In fact, the most recent major investment was in January 13 of 2022, a funding round for Near Protocol where $150 million was raised. And according to a January 2021 SEC filing, 3AC had almost 39 million of Grayscale's Bitcoin Trust, otherwise known as GBTC. The return on their Solana investment alone raked over 500x at its all-time high, and then they saw a number of other 100x and more in different other investments that they made. In fact, everything was going so fine for 3AC that some financial analysts looked at 3AC as a yardstick for projects they want to invest in. Whatever 3AC touched pumped, and so people want to buy only coins that they can find that 3AC was one of the investors, whether at seed round or private round. So a fund that was so massively successful, what happened to it and why did it crumble? What happened? It all began with the Luna collapse. You see, the LFG at the time sought to raise $1 billion to shore up the UST peg so that the UST can get back to the peg with the US dollars. However, for this to happen, they needed to raise this $1 billion from several other funds. Among those who invested was Defiance Capital, Jump Crypto, and you guessed right, 3AC Capital. They were seeking to raise $1 billion. Now from this $1 billion, 3AC alone contributed about $500 million that was equivalent to about 9 million Luna tokens at the time. They also worked closely with the LFG to acquire more Bitcoin to shore up the UST peg. However, Terra UST collapsed and the rest is history today. Now, at the time when many funds were pulling out of Luna and UST, you may wonder why on earth will 3AC be investing $500 million into a sinking ship? Apparently, 3AC had gone full degen and they are taking a massive BTC long position with liquidation set at 24k. And so they knew that if Terra collapsed, there was no way BTC would not drop to that 24k, thus liquidating all of their assets. And so they tried to work closely with LFG so that Terra will be saved and then their position will be saved. Now, this is kind of foolish if you ask me, because they're supposed to be practicing risk management. I mean, they could have cut their losses at the time and then do something else. because the funds they were using was not just their own money but users' money. That $500 million is now worth a meager $670. According to Bloomberg, 3AC had exited their GBTC holding no later than the 17th of June 2022, probably due to liquidation cascade, so they wanted to cash out some money. Zoo also thought that holding ST-ETH was a good investment idea, and that's because when the merger occurs, ST-ETH can be exchanged for 1 ETH, 1:1. He was so bullish that he made this tweet. Just 2 days after this tweet, 3AC converted 22k ST-ETH to ETH as the price of ETH fell massively below the price of Ethereum. And so at this point in time, the rumors about the 3AC collapse was spreading. This became intensified when Celsius announced that they will be stopping withdrawals from their platform. At this point, Zoo had deleted his Instagram account. As news of the collapse was confirmed, it became clear that 3AC was involved with several other big funds going full degen since the Terra collapse. Revenge trading, make it all back in one trade, whatever you call it. They ghosted counterparties who tried to reach them and ignored several margin calls. In fact, even team members could not reach the 3AC core team. Also, those who gave 3AC money for investments, they just couldn't get in touch with Zoo and Kyle Davis and the others who called big shots. This prompted other protocols including DYDX and Avalanche to tweet out confirming that they were not affected by whatever was happening to 3AC. Who was exposed? Many lending platforms such as BlockFi, Genesis Capital, Finblocks, Deribit, BitMEX, and a number of others were all affected. As bad as that was, this is where it gets even more interesting. 3AC seeked funds from other investors without informing them that they had a BTC long position, and they also lied about their AUM. Most funds smelled the rat and didn't give them any loans. But somehow, Voyager Capital bought their story and lent them $700 million, a loan that was under-collateralized. They used interest payments to provide retail-facing yield through their platform and took a cut for themselves. Now, by the time Voyager became aware of this, it was too late, and VOYG price fell by a massive 50%. At best, all 3AC assets amount to about $400 million, whereas they have debts amounting to about $2 billion. So even if they manage to pay off some of these debts, they will still have about $1.6 billion to pay. And so you should expect that when future tokens unlocks happen for projects that they invested in, whether at seed round or strategic round or any other phase, it is highly likely that they are going to sell these tokens. So you want to pay attention to unlock schedules of tokens that 3AC had investments in. It's been bad business for funds exposed to 3AC. SBF and FTX have tried to save some of these funds because millions of users are tied to these funds and it can really get ugly. Now, whether these funds are worth saving or not is up for debate. In a recent article from Binance CEO CZ, he mentioned that he was not impressed by attempts being made to save some of these funds, and he shared his opinion about these bad projects that should be allowed to fail, citing 3 key reasons. 1. They are poorly designed with no market fit. 2. They are poorly managed. And 3. They are also poorly operated. The full effect of 3AC's demise is yet to be felt, but one thing is clear: there will be liquidations and then there will be lawsuits. If you enjoyed this video, please hit the like button and subscribe, and also turn on notifications, and watch out for my next episode on crypto forensics. You can also follow me as well on Twitter, link in the description below. Remember, this is not financial advice, it is purely educational content.